Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Saturday, May 23rd, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In today's video, we'll explore Robinhood Crypto's leadership change, the SEC's approval of Nasdaq's Bitcoin options, Ethereum ETF outflows, Polymarket's expansion plans, Chainlink's growing adoption, Monstro DeFi's market overview, a Verus hack resolution, and the promising future of crypto stocks. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now with that out of the way, let's dive in. Tanya Denisova, the Chief Operating Officer of Robinhood Crypto, has announced her departure after more than 5 years with the company. This news comes as Robinhood faces a significant decline in its crypto-related revenue. In the first quarter, the company saw a 47% drop in crypto revenue, falling to $134 million from $252 million the previous year. This departure highlights the challenges Robinhood faces in navigating the volatile crypto market. Robinhood is actively working to reduce its dependence on cryptocurrency market cycles and is repositioning itself to handle price volatility better. The company offers a variety of services, including commission-free trading of major cryptocurrencies like Bitcoin and Ether, as well as crypto wallets, on-chain transfers, and staking services. Despite missing its Q1 earnings and revenue estimates, Robinhood remains committed to bridging traditional finance with digital assets and expanding its crypto offerings internationally. Next, we look at the SEC's recent approval of Nasdaq's cash-settled Bitcoin index options. This marks a significant regulatory milestone, allowing Nasdaq to list these options on the Philadelphia Stock Exchange under the ticker QBTC. These European-style options are cash-settled, meaning they eliminate the risks associated with custody and assignment. Instead, holders receive the difference between the spot and strike price at expiration without any physical Bitcoin transfer. This structure is particularly appealing to institutional investors who are seeking regulated exposure to Bitcoin without the complexities of custody. However, trading won't commence until the Commodity Futures Trading Commission grants the necessary exemptive relief, as Bitcoin is classified as a commodity. With only one commissioner currently filled at the CFTC, there may be delays in this process. Nonetheless, this approval reflects a more permissive regulatory stance since early 2025 and adds to the suite of Bitcoin derivatives available to investors. Moving on to Ethereum ETFs. The market has seen a notable trend, with outflows extending to the 10th consecutive day. On May 22nd, U.S. spot Ethereum ETFs recorded approximately $6.6 million in net outflows. BlackRock's iShares Ethereum Trust led the withdrawals with $5.6 million, while Fidelity's Ethereum Fund saw $1 million in outflows. These outflows suggest a waning institutional appetite for Ethereum, or perhaps a strategic profit-taking move amid macroeconomic uncertainty. Despite this, the total assets under management for spot ETH ETFs remain above $10 billion, with ETH prices hovering around $3,100. Interestingly, while Ethereum ETFs are experiencing outflows, spot Bitcoin ETFs have seen net inflows, indicating a potential rotation of interest from ETH-specific exposure to Bitcoin. Now, for Polymarket, the prediction market platform is setting its sights on Japan. The company has appointed Mike Eidlin as its representative in Japan, aiming to secure regulatory approval to operate legally by 2030. However, Polymarket currently faces challenges due to Japan's strict gambling laws, which have blocked its operations in the country. The platform is also under scrutiny in other regions, like the US, South Korea, and India, where it faces legal challenges related to gambling regulations. Despite these hurdles, Polymarket's move into Japan signals a strategic push for regional expansion and increased crypto adoption, even as it navigates complex compliance landscapes globally. Chainlink is making waves with its growing institutional adoption in 2026. Known for its Oracle technology, Chainlink connects smart contracts with real-world data, enabling secure and accurate information flow for financial markets, tokenized assets, and decentralized applications. This year, the demand for tokenized real-world assets like bonds and real estate is surging, with banks and financial firms exploring blockchain solutions. Chainlink's strategic partnerships, such as its collaboration with the U.S. Department of Commerce in August 2025, have positioned it as a key player in the blockchain space. By bringing government economic data onto public blockchains, Chainlink is enhancing its utility and long-term value proposition, making it a critical infrastructure project in the evolving crypto landscape. Let's take a closer look at Monstro DeFi, a decentralized finance ecosystem governed by a DAO and developed by Monstro Labs. The current price of Monstro is approximately $0.00863, with a market cap of about $1.9 million. The 24-hour trading volume stands at around $173,862, with a circulating supply of approximately 221.19 million Monstro tokens and a maximum supply of 400 million. Monstro focuses on managing on-chain capital and experimenting with decentralized financial strategies. Its governance token, Monstro, allows holders to participate in protocol decisions, treasury management, and product direction. The platform features on-chain staking with a time-based unstaking penalty, a true token burn mechanism, and plans for a permissionless on-chain lending and collateral platform. In a surprising turn of events, the hacker who exploited the Verus Ethereum bridge has returned 4,052 ETH, valued at approximately $8.5 million, after negotiating a bounty deal. The attacker retained 1,350 ETH, or about $2.8 million, as a white hat bounty for returning the majority of the stolen funds within 24 hours. This exploit involved a forged cross-chain transfer vulnerability, highlighting the risks associated with cross-chain bridges in DeFi. Such bridges are often targeted due to their large liquidity pools and interconnected ecosystems. With approximately $634 million stolen in April 2026 alone, the incident underscores the critical need for improved smart contract audits and enhanced cross-chain security measures. Finally, let's discuss the long-term growth prospects of crypto and blockchain stocks. Despite the inherent volatility and regulatory challenges, cryptocurrencies continue to thrive. Bitcoin, for instance, has rebounded above $70,000, supported by institutional inflows into Bitcoin ETFs. Ethereum is also gaining momentum, following significant scalability and user experience upgrades. U.S. regulatory developments, such as the Genius Act for stablecoin regulation and the Digital Asset Market Clarity Act, are setting the stage for clearer crypto asset oversight. Key beneficiaries of these advancements include Circle Internet Group, Coinbase, and Visa. Visa, in particular, is expanding its stablecoin-linked card programs globally, with payment volume growing nearly 200% year-over-year in Q2 fiscal 2026. Meanwhile, CME Group is investing in crypto infrastructure and launching 24/7 trading to capture global activity. These developments highlight the potential for blockchain technology and related stocks to achieve significant growth in the coming years. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.